outlook for Australia's hotel market is strong, reflecting the high demand from both international and domestic visitors, which have been aided by Australia's falling dollar in recent years. International visitors to Australia increased by 6% to almost 8.4 million visitors last year. Looking ahead, over the next 3 years, international visitors are going to increase even further by almost 20%, boosted by demand from Chinese, Japanese and Indian visitors. The falling Australian dollar has also made domestic travel relatively affordable compared to international travel for all Australians. Most states recorded large increases in domestic tourism over the past year, with Tasmania up 10% and WA up 12% the standouts. Sydney recorded the highest overnight domestic tourists with over 10 million visitors. However, Melbourne is catching up, increasing more than 1 million visitors over the year to almost 10 million. In addition to domestic trips increasing, domestic tourism spend is also increasing, up 10% to reach $70 billion as of September 2018. The National Infrastructure Program is set to increase the attractiveness of Australia as a tourism destination. Major projects include the expansion of Melbourne's Convention Centre, the Western Sydney Airport, and the Queen's Wharf development in Brisbane. The development of new hotel rooms is expected to peak this year, with almost 6,500 new rooms delivered to the market, focused on Melbourne, Perth, and to a lesser degree, Sydney. The increase in new stock will put further pressure on existing hotel owners to expedite hotel renovations to compete with this new stock. Despite the growth of tourists and subsequent demand for new and refurbished hotel rooms, CRE tourism debt held by Australian banks has only increased by 3% over the past 10 years. As Australian banks have rationalised and tightened lending criteria, debt funds have emerged as a major lending group to the Australian hospitality sector by providing more flexible capital solutions.